Hello, everyone. Welcome to our brown bag session. And thank you for joining and spending your time today on this session. So my name is Soleil, and I'm your facilitator from the Singapore Fintech Association, SFA. I'm excited to introduce you to our esteemed panelists from the SFA's Securities and Crowdfunding Subcommittee, who will be taking us through key challenges and opportunities for equity and lending platforms, along with the current trends in the industry. So today we have Wong Kah Meng, co-founder and COO of Funding Societies, Kelvin Lee, co-founder and CEO of Funnel, Alice Chin, co-founder and general counsel of Investex, and our moderator for today, Derek Lim, audit partner at Deloitte. So this will be a breezy session and informative session, but first some housekeeping before we get started. Should you have any questions during the presentation, please do type it into the question box, your Q&A Zoom control panel. It'll be brought up and picked up by our panelists during the presentation, and we shall have some Q&A time at the end. So now, without further ado, we'll turn the time over to Shadab, President of the Singapore Fintech Association, and he'll be giving a quick opening address. Shadab, please. Thank you.
Thank you, Soleil. Good afternoon, everyone. Thanks for taking the time out with your brown bag on a lunch afternoon. Appreciate everyone's time here. I just wanted to give a very quick overview of what we're doing at SFA. As you know, the association has grown leaps and bounds with the amount of activities and initiatives that we've been running. But for our association to be effective and to have the leverage that we need to grow the industry together, we need to be working very actively together, specifically on the various industry segments that we all represent. And subcommittees are a very important element of what we do. So I'd really like to thank Alice and the team for putting the securities crowdfunding, and you'll hear from her soon on a bit of a name change that's happening as well, together, and to work on key initiatives. So ever since the current ExCo was elected last year, one of the key initiatives for us was to have a proper structure put to the subcom organization and how the subcoms actually function. So with the support of the industry and all the industry leaders who represent their companies on these subcommittees, we've been able to put together a good program of initiatives, a list of initiatives and events that we've been organizing as well. So the most important element being advocacy and the ability to work together for market development efforts. So I'm glad to report that our subcommittees have been able to put together a good, diverse and very, very busy calendar of events and initiatives, and have had multiple regulatory roundtables with the MAS and other policymakers as well. So all that is in good progress, and today's event also reflects our focus towards strengthening our businesses and the ability to share information nuggets, as well as our own experiences amongst the community. So very much look forward to hearing from the industry leaders on the panel today. And with that, thank you very much again for joining. Over to you, Alice. Alice, you're on mute.
Yes, thank you. Thanks for speaking with us today and spending some time with us. I know you've got a busy schedule and can't stay for the entire session. So really, again, thank you. I think just some housekeeping as well. I meant to remind everyone that this session is being recorded and will be available after the session to those that couldn't attend. But yeah, so let me just introduce myself very quickly. I'm the current chair of the Securities Crowdfunding Subcommittee, and I'm actually happy to announce today here officially that the subcommittee is changing its name to Digital Financing Subcommittee of the Singapore Fintech Association. And this is given to the broader scope and expanded business models of the members in the subcom, which currently spans from equity-based securities crowdfunding platforms like Funnel and CapBridge to lending platforms like Validus and Funding Societies. as well as digital investment and trading platforms like InvestX and ADDX and those service providers who support these platforms like digital asset custodians. So the common theme across all of these models is an alternative and regulated venue for financing and those service providers who support all of these activities. Just to give you some background, I joined the Subcom late last year. This is our first inaugural event. And the key objectives of the Subcom, if we can maybe start sharing some of the slides, Soleil. Thank you. So the key objectives of the Subcom is what we've come up with, REP. REP standing for represent, educate, and promote. And I'll go into each one of these in a little bit more detail. Next slide, please. So R stands for represent. We want to represent and be the voice for the wider community. We are stronger as a collective community, and our voices will be heard as an industry rather than individual players. And we want to hear from you, our community, understand your pain points, offer a venue to share these pain points and see where and how we can address these pain points together. So some of the recent initiatives that the Subcom has taken include dialogue with regulators, including the MAS, about certain hurdles around advertising restrictions for equity-based platforms, as well as specific challenges faced by lending platforms, such as the inability to have direct access to Credit Bureau Singapore. We'll delve deeper into some of these subjects on our panel discussion later. So I'll reserve my comments to a bit later. But I think the point is we know that there are common issues that everyone in the industry is facing, and we want this to be your community, your sounding board, and an additional resource you can tap into. We are also compiling a membership directory just for the Subcom members, so it will be easier to understand where cross referrals and collaboration can happen. Now, going to the second pillar of the subcommittee, educate. We want to provide a venue for the community to come for everything related to alternative financing and investing. Through events like this and other joint events with other subcoms and industry organizations, we want to help our communities understand and provide access to information on alternative investments, how to safely invest, and what are the opportunities out there. There is also a wider SFA initiative to create more transparency for all of the SFA members by sharing all of the initiatives of the respective subcoms in a newsletter or a profiling of specific subcoms and their activities on the homepage. So that's an ongoing subcommittee spotlight mentioned here. And lastly, the last pillar, promote. We want to grow our community and help our members grow. And how do we do that? By active recruitment, active individual reach outs that all of us are doing to anyone who's relevant to this subcom. As previously mentioned, we are expanding the membership to include digital exchanges and digital asset custodians, and we are inviting them to join the subcom. From a regulatory perspective, I think there's a lot of crossover in terms of regulation and business activity. And so one of the leaving thoughts as a subcom chair is, I think as a fintech, yes, we have other competitors in the industry, but we should also be supporting one another and looking past competition towards areas of collaboration. So that's what P stands for, to promote one another and help each other facilitate business where possible. And you know, I think if you like what you've heard so far and want to get involved, this is an open call for anyone to participate and join as general members of the subcom. And if you want to take a more active role, we are expanding the subcommittee. So we have room for a few more members to take a more active role. And so if you're interested, please do reach out. And that will conclude the subcom update. Next, I think we have coming from funding societies. Please, just give a brief introduction about yourself and the business.
Hi, thanks, Alice, and thanks, Shadab, for the overall introduction. And pleasure to be here, sharing with the wider Singapore Fintech Association panelists as well as audience. So I think maybe a quick introduction about myself. I'm the one of the co-founders and CEO for funding societies across the region. Joined the company quite a while back, I think almost 6 years now, and led the whole, and currently overseeing the Malaysia, Singapore, and Thailand businesses. So pleasure to be here. I think over the next couple of pages, we'd like to just give a quick overview in terms of what debt crowdfunding is about, what we are trying to solve, as well as 1 or 2 pages around the business model specifically for funding societies, which are probably quite consistent across the market as well, although obviously there are nuances across different participants. If we can move to the next page. So I think just as an overall bit of a history, so debt crowdfunding started off probably sometime in 2010, 2011 in Europe, and then moved into the US and then China. And I think the whole premise of it was starting off back from the sort of GFC, when credit was very difficult to get access to. If you mind going back one slide. Cool. So post the GFC, I think there was basically there was quite a bit of challenge in terms of getting access to credit, and that's where the proliferation of these crowdfunding platforms came about. I think for Southeast Asia, the first wave of platforms came about in probably sometime in 2014, 2015, in Singapore, and then Malaysia, and then Indonesia. And I think more recently in Thailand, for example. So that was the whole history around when it started, but I think ultimately is to resolve or address a structural gap in the market, whereby you're trying to bridge between the internal and informal capital sources, like family, friends, and relatives, and to the as well as getting financing or facilities from banks, right? And this is a space whereby we see most of the opportunity to the market in terms of actually giving access to SMEs for working capital purposes. Now, having said that, there are also sort of the segments that we serve to enable them to have top-up financing to banks as they expand their business. So one is access to finance, and the other one is really top-up financing to the facilities that they are getting from the local financial institutions. And then obviously towards a more mature state, you will look at tapping into capital markets and so on and so forth. So I think that's the overall lay of land in terms of how we fit into the overall lending escalator. And I think for us, funding societies specifically, we serve basically the entire gamut of SMEs, from the micro entrepreneurs up to perhaps even larger and smaller listed companies in Singapore at least. Next page. So overall, when we look at Southeast Asia, we see that there's a gap of around $350 billion in terms of SME financing opportunity, and this is from the World Bank IFC, which is the difference between which takes the difference between the amount of facility that's applied by SMEs in these different markets, less the amount of financing that's being approved by the local financial institutions. So overall, we see a big gap for this gap in Southeast Asia, and I think even whether you're looking at it from a sort of quantum perspective or as well in terms of count perspective. And some of the very high-level challenges It's in terms of user experience. So how quickly and how easily can you get a loan approved? I think the second piece is around how are you able to sort of ascertain whether a particular borrower is a good paymaster, whether it's from a willingness to pay as well as from a ability to repay. I think lastly is in terms of the cost of financing. So I think once you go into the informal sector, the shadow lending sector, I think that's where the financing rates can be exorbitant for the SMEs that don't get access to financing. So these are the three sort of key pain points that we observe in the market across the region that we operate in. I think lastly, just to shed a bit more color around the sort of business model that Funding Societies does specifically, is that we are a digital platform that connects SMEs. Again, this is on micro, small enterprises with a few $100,000 in terms of revenue, up to perhaps even small listed companies that want sort of bridging, very short-term financing for bridging purposes, right? For example, if they want to mobilize for a certain project or to complete a particular transaction. And the source of funding, compared to banks, is really focusing on the retail, high net worth, as well as institutional investors. Primarily, we focus on short-term financing solutions for SMEs, because I think for longer-term solutions, more collateralized options, I think they're much better well served by the banks. And I think the banks currently do quite a good job in terms of serving and accessing the market. So most of the financing that we provide on the platform are typically less than 12 months. In terms of tenor, a big chunk of it will be transaction-based financing. So it's whether it's financing receivables that SMEs have, as well, or providing financing to SMEs to sort of execute or mobilize for the projects that we have on hand. So things like payables or PO inventory financing. So we are the intermediary that helps connect between these SMEs as well as investors for the different segments. Cool. Thank you. So that's a quick introduction about Funding Societies, and happy to take questions at the panel later. Thank you.
Thanks, Carmen, for helping me actually introduce how we existed. I didn't actually realize that we have the same journey towards discovering our value proposition to customers. So I think, as Carmen shared earlier, so the whole wave of how equity crowdfunding started was really born out of the GFC in 2008. I think for equity crowdfunding platforms back then, President Obama wanted to create jobs for the common people, and yet the banks didn't have risk appetite to actually bring a company to the capital markets. And without capital, essentially, then a lot of jobs are not created, or jobs lost, in fact, and instability, political pressure, etc., etc., etc. So I think the Jobs Act essentially helped remove banks from the equation and allowed private companies to go directly to investors, the capital markets, essentially, right? And that's how in 2015 funnel started, but really started with regulations, which is really apt because we're talking about this on the panel today. It was in fact quite interesting that in our region, in Southeast Asia, it was actually Thailand and Malaysia that started adopting this framework from the US first, and not actually Singapore. And I think over time, it's really evolved, and I'm actually quite happy that Singapore is listening to the market, it is listening to the players who started in 2015 as well, including ourselves, and the platform like SFA to actually help lobby and make our collective voices heard louder. It's extremely useful to help regulators also understand our business and ultimately protect the ecosystem. So our group actually exists in the middle of two trends globally. The first trend is really what we observed since 2012, whereby companies globally are staying private longer. And there is a blurring of lines in that case, right? Like, if your companies are still private after 10 years, a lot of the capital that have invested in these private companies are not able to be recycled. And a lot of the funds, the LPs essentially, are not able to get their money back after investing in these funds. So as the private and public capital markets really come together, there exists a problem whereby if the banks are not serving these private companies well, then who can actually serve these companies well? And private companies actually have a face and a name, right? So these are people that fellow entrepreneurs like ourselves who maybe have a good idea from school, came together with a couple of friends to start the idea, maybe managed to raise Series A funding, But as you grow, towards a Series C or Series D, you realize that a lot of the capital markets, banks and infrastructure, in fact, the exchanges, they have high fees, and they may not really, because of the high cost structures that they have within their own organizations, they may not actually consider, you a core customer. And because of that, a lot of these guys are not allowed cost and time effective access to the capital markets. So that's the first trend that we're seeing. The second trend that we're seeing that's probably a bit more recent is really the convergence of a traditional world that we have been operating in for the past 5 years and the digital asset world. And I think our view, at least within Funnel, is that there will come a time whereby digital assets have a place in the traditional portfolio for the common investor. But for that to happen, I think a lot more regulations must come in. And I think that's how we see ourselves actually also molding the new generation of investors, helping them allocate into alternative and private assets in general. But most importantly, I think even though there is a lot of interest now after, I think, 7 years in the business, in accessing alternative assets, the biggest problem that we see in the market today is that I may be able to invest, but I cannot exit. And I think that's where, Investor X, Alice, is also helping a lot of people actually create liquidity in their private portfolio. And I think that's a segment that is fast growing in our region as well. Next slide, please. Yep. So I think that's how, just to help you guys visualize the Funnel Group in general. So on the left side, you can see Funnel. So I think our own network of investors, and we're actually licensed beyond Singapore also to operate in Malaysia and Indonesia. We have over 100 FI partners, I think, from traditional players who may have products that they want to expand the distribution into, that we partner with them to actually distribute high quality funds or even direct assets of these traditional banks to a broader segment of investors, from equities to private credit to funds to NFTs, even non-Binance, and asset-backed securities of real assets like whiskeys, wine, property, art, watches. So basically anything that's alternative, we think that is super interesting for the regular person to consider adding a portion into the portfolio. But again, the most important problem that we're trying to solve here is liquidity, whereby after you invest, you must find a way to exit next couple of years, hopefully as easy as you invested. Next. Yep, so a quick overview of things that we've done over the past couple of years. So I split it into investing, which is really about creating access. Am I able to access private alternatives, but not just thinking about investing, but thinking about lowering of ticket sizes. So I think our Malaysia franchise is a good example of that, whereby retail investors, and I think we're going to discuss this problem as well today, about retail investors being able to actually access such products easily and at a small enough, comfortable investment ticket size. And then on the right side, I actually split it into liquidity, right? So trading on the exchange itself, how much volume of trades are actually completed on our exchange. So I think this is something that we're working on, and we just started working actively, I think Q3 of last year with our exchange, and something that we're also growing into, growing a lot more into, especially after Binance invested in us in December. Next slide, please. Yep, so final slide talking about helping everyone visualize how building a platform for alternative assets is really about industry-wide effort, and it's very, very collaborative, as what Alice mentioned. You can have access, but if you don't have systems of scale and really think about bringing down the costs of distribution and also getting investors' ability to invest at small enough ticket sizes, you will not be able to scale over time. And then subsequently, with the exchange, we want to create liquidity, and how do we get liquidity as fast as possible for the investors so that they feel confident and comfortable to invest in the asset class. Thank you.
Thanks, Calvin. I don't think we got an introduction to who you are, but you are the co-founder of one of the co-founders of Funnel.
Yep, sorry guys.
Okay, Okay, and I think that was a really good segue into what, I'll be talking about, which involves a lot more of the Web3 concepts. But thank you, Carmen and Calvin, for that really nice segue, just how crowdfunding came about. And I really do think where we are today is version 3 almost of crowdfunding now. But just a little bit about myself. I'm the co-founder and general counsel for InvestaX, and by way of background, I come from a very traditional world of finance, practicing as a corporate lawyer in private practice for many years before co-founding this startup, and it is my first startup. But the company itself, next slide, please. InvestaX is a licensed fintech platform which aims to transform the private capital markets by using blockchain technology to tokenize private securities and to remove some of the friction in the investing and trading of private securities. So we like to think of ourselves as an end-to-end solutions provider for anyone who wants to issue, distribute, tokenize, or trade security tokens. And we provide some of the key infrastructure to digitize real assets using our own issuance technology and secondary trading venue. Next slide. And I think we all know the challenges which Calvin mentioned and Carmen also mentioned earlier in the private markets. There's lack of liquidity, lack of access, poor price discovery, inefficiency, and blockchain and smart contracts can be introduced to traditional finance to automate some of these processes and provide access through fractionalization by breaking it down into smaller investment sizes. And this was generally an asset class that was inaccessible to the majority of investors. So next slide, please. What we'd like to say at InvestaX is that our mission is to use blockchain technologies to develop next generation technology-driven investment vehicles, what we call digital securities, to reduce costs, remove friction, increase transparency, and secondary market liquidity in the private markets. We want to bridge traditional finance with DeFi concepts. And I think we can all acknowledge that every significant expansion of the public markets can be attributed to some development of new technology or process. Electronic trading floors, ticker tape, dematerialized shares, central depositories. All of these were introduced to the public markets, but we've seen very little innovation in the private markets. Transactions are still largely done the same way with manual processes. Trades in the secondary markets do happen, but are generally between large institutions and large block trades, and thereby excluding the majority or the average investor. So we see tokenization as a way for more average investors to access exclusive offers, and as a way to bring more unique and Web3 concepts into traditional offerings. So to date, you can see the size of the tokenized or security token market is just a tiny fraction, 1 billion out of a potential 13 trillion market size. So there is a huge world of opportunity there, and we're just scratching the surface. We've seen traditional illiquid assets such as real estate, VC funds, PE funds being tokenized as a start, but we'll move into much more interesting products, I think, in the future. Next slide, please. So As an example, we recently tokenized interest in a Bored Ape Yacht Club NFT on InvestX, which we gave to every investor who signed up on our platform, and you had the right to acquire these tokens, which gave you a fraction of the future appreciation of the NFT. And this way, our community can explore an entirely new form of asset class, try to hold it in their digital wallets, try to understand, invest, and do things with it that they may not be familiar with. So this is an ability for people to explore how to trade regulated digital assets. And it's just one example of what, our concept of a technology-driven investment vehicle, and how we aim to bridge the gap between TradeFi and DeFi. And I think I'll leave it at that for now, and we can obviously have more discussions around this on the panel discussion. So thank you, everyone.
Sure, good afternoon. So I think you guys have heard from the respective founders in terms of their respective businesses, right? My name is Derek, a partner in Deloitte. I was a member of the subcommittee. Initially, I've heard from Alice, highlighting some of the initiatives undertaken by the subcommittee and the relevant topics that we will be engaging the MS, right, to provide a point of views for the industry. For today, we'll be covering 3 key topics, which we'd like to share with you. One, in terms of the lending platform, right, in terms of their key challenges and opportunities, right, particularly how data access, taxation, and potentially market evolution could further encourage adoption in this space. Next topic that we'll cover mainly for equity platform, right, in terms of key challenges. Today we'll be interested in covering potentially in terms of, exam offerings, including advertisations of restrictions, right, for retail markets. And last but not least, the current trends in the industry and how, potentially this will fit into your business model. So maybe starting with coming, right, in terms of lending platform, right, maybe share with you some of the insights, right? What are the key challenges that you see that are present in the current environment in terms of accessing information, for example, data of individuals, and what do you think can be further improved, right, for better credit enhancement or credit assessment of such individuals that may come on board your company?
I think thanks a lot, Derek, for the question. So I think there are challenges across the region, but maybe for this session, I'll focus more on Singapore specifically. So we started off business in Singapore in 2015. We have funded across the region more than $2 billion US in terms of financing for SMEs and businesses. So we do focus purely on businesses. We don't do any kind of personal or consumer loans. And we've done more than 70,000+ loans and SMEs across the region. So I think, and we regularly survey our borrowers in terms of where areas that we can improve, or what areas do they like most about using our service. And I think 2 things that always stand out is in terms of speed, as well as in terms of user experience. So those 2 things are clearly the key criteria. And this is quite consistent across the markets that we operate in, interestingly. And I think from that perspective, from a platform perspective, ultimately we are in the business of underwriting the risk of a particular business. And there are generally just 3 key pieces of information that we use. So the first one is basically information around the cash flow performance of the business. The second piece of information is around basically the financials of the business. And the third piece is in terms of, so these 2 pieces helps us to assess the ability to repay. The last piece of information that we use is more around their existing repayment track records and facilities with their existing financiers. And that tells us their willingness as well as the ability to repay. So those are the 3 key general categories of data sources that we use. I think in terms of the key challenge that we face is from a sort of credit bureau report perspective, there are 2 options really in the market. So one is Experian and one is a CBS. So I think, so we can get access to Experian. I think the challenge there is really around the coverage. So the information that is contained within experience depends on the participation of the financial services industry. I think that's the challenge that we face with the experience report. I think on the other hand, we have the Credit Bureau report, which contains fairly substantive information, detailed information, because it's basically run and managed by the association of all the banks in Singapore, and that has a lot of rich data that we can use to underwrite the SMEs in terms of their willingness and ability to repay. Now, the challenge right now is that a lot of the SMEs that come to us for financing, they would have to sort of leave the digital onboarding journey that we have, and basically they would have to go and request for a report and then send it to us as an addendum or as an additional documentation. So that creates a break in terms of the user onboarding journey and the user experience, which is quite critical in terms of getting people to explore and to try digital lending platforms such as ourselves. So I think that's one of the key challenges that we see from a perspective of a user experience from SME perspective. I think there's also another benefit, another challenge that we face is that if the information comes from the SMEs or businesses, there's always the risk of the documents being doctored or fraudulent. And that's where we have to exercise additional judgment or assessment in order to figure out whether there are sort of doctored pages or tempered numbers and things like that. So I think that's one of the challenges that we face in the market in terms of from a credit bureau perspective. I think the second piece of information that we use is in terms of financial reports. These are more relevant to, let's say, the larger medium-sized SMEs, whereby we provide them larger amounts of financing for bridging purposes and so on and so forth. And we therefore, given the larger ticket size, we do more thorough due diligence, and it requires us to have a look at the financials. And now, having said that, the challenge with that is basically there is no standardized format, as Derek, you can probably empathize. In those, every business, the top general line items would be well and fine, but I think once you go down to the details and to the notes of the financial statements, then that's where there is a lot of variability. And I think that's where the challenge is in terms of automating or codifying a lot of this credit decisioning. So I think if we can move towards an area or direction that is more standardized at a granular level, I think that would be very helpful in terms of applying a lot of the machine learning technologies, AI, that we can use to much more seamlessly underwrite and provide a credit decisioning in a much shorter period of time. So I think those are the two key areas where we see in terms of data access, in terms of challenge for the Singapore market.
I mean, can I just maybe further query on some of the things you mentioned, right? In terms of, the credit bureau, because you were saying that you break off your digital kind of a platform had to go through manual, right? Does it actually significantly slow down the process? And if compared to, if digital on board, how impactful is that? And would it also cause it to potentially loss of customer, or would it just be a speed issue, or is it a business issue?
Correct. So when we design the onboarding journey, we have designed it with a fully end-to-end digital journey in mind. So we focus a lot on reducing the areas or steps in which there potentially could be a drop-off. So for example, even for things like eKYC and things like that, we try to avoid as much as possible people leaving the journey. Because once we leave the journey, then basically they would sort of deprioritize, they would put it to a later date and so on and so forth. So I think it really helps in terms of conversion rates as well as experience.
Got it. Then in terms of, you talk about, the information, right? So technically, in a sense, the current SBRL or current reporting framework doesn't support the detailed information required for assessment, right? So how do you bridge the gap? Do you actually ask the people to provide, or you guys do an overall analysis on the current financials?
Yeah, so for the larger tickets of financing, we do actually request for the financial statements and perform a more thorough due diligence on it. The other way that we try to mitigate the risk is actually to provide lower amounts of financing for a better user experience, in the trade-off of better user experience, but we are able to mitigate the risk through lower amounts. But sometimes that is not sufficient, especially if, let's say, if you're a bigger SME and you need the funds to mobilize a certain project. Got it.
Okay, maybe I'll touch on another topic because on the lending platform. In terms of taxation, right? Does your lending products in funding society differs from traditional banks? And so how helpful would that be?
Yeah, I think in general, when you look at crowdfunding, debt crowdfunding in general, the structure or the facility or the securities that are being issued instead of a debt security. If compared to sort of like the broader financial services industry. So for example, interest on your fixed deposits or your debt securities, generally those things are tax exempt. But for the interest that investors earn on the notes on sort of debt crowdfunding platforms, they are actually taxed. And I think, and they are also not allowed to sort of write off or net off the kind of defaults that they also experience from the platform itself. So I think it becomes a bit of a double whammy effect in terms of the from a tax and from a capital loss perspective.
You get taxed for the amount you gain, but not for the losses you made in the way. Yeah.
Correct. So I think one is tax exemption. The other one is basically there's also no accounting for the defaults that happen. And I think ultimately what happens is then you need to then charge a higher interest rate or cost of funds to the SMEs itself, which is not great, because I think for us, we try to balance the needs of both the SMEs as well as investors. And I think we try to lower the rates as far as possible from a risk-adjusted perspective to the businesses. So it becomes something that it is also productive for them to undertake from a financing perspective. So I think we're trying to help to see if we can lower ultimately the cost of funds with this approach.
I understand. Got it. So no, you touch on taxation in terms of onboarding. Just thinking for lending platform, right? Comparing to Singapore, right, to other regions, for example, UK and Western, right? Do you think there's any best practices or practices out there in other countries that can be brought to Singapore? And if so, right, what needs to be done in a way?
I think that I wouldn't say best practice, but perhaps some practices that we have seen in other markets, which we feel could be impactful, but in a positive way without much downside is, for example, the UK Referral Scheme. So in the UK, if you're a financial institution and if you reject an SME's loan application, you're actually required to refer it to a platform that connects them with alternative or digital lenders. So they have an option. And that's impactful because ultimately you will get the consent from the SME in order to do this. So there's very little risk in terms of customer confidentiality. At the same time, also it provides more options. And from what we have read is that basically if someone gets rejected from a loan upfront, their willingness to apply for another loan decreases. So to make it as seamless and to make the options available, I think that's where we are trying to see if this is a model that we can potentially also apply to Singapore as well. Yeah.
I understand that. Okay, in interest of time, maybe I bring over to equity platform, right? Kevin, we talk about the restriction, right? What are the key challenges that in this environment in terms of marketing of products that you want to share with us, right? And how does these requirements actually differ from other countries in a way?
Sure, thanks. Sure, thanks for the question. I think maybe just to give or remind everyone about the products, right? So I think for us, besides equity products, we also need to distinguish between the securities that we're offering. So basically, it's a securities product, not a invoice or a contract, essentially. So because it's securities, it's regulated business, and therefore, over the past couple of years, we've completed over 600 million US in terms of deal value, and over maybe close to 1,000 transactions completed. Amongst the countries that we are regulated to operate in, which is Singapore, Malaysia, Indonesia, all the regulations across the various products, across the different segments of people that we distribute to, differs. So there's a big matrix essentially in terms of product and scope. But what I would probably share as the biggest challenge, besides that crazy matrix to navigate around, with regards to marketing these products, is really about investor education first. So I think the problem here is that a lot of the broader public are not necessarily aware of what is available. So a lot of times, especially for maybe in the context of Singapore, people are just familiar with maybe public REITs, or even even worse, ILP plan, insurance-linked investment schemes, etc., etc. And the lack of awareness, essentially, of what else is out there, right? I think to Cummings' point as well, really is exacerbated by regulations. And in Singapore, we can only deal and therefore market to accredited investors. Now, the challenge there is that for the guys and the family, super angels or the family officers who are accredited investors, they know what's out there already. And in fact, like, as an example, you don't ask a super angel who's, super high profile for their documents to prove that they are a super angel before showing them what you have. But that's essentially what the regulators in Singapore are asking for. As opposed to for the common person on the street, the average person actually, we can't even show them what we have. Can't even talk about what we have on the platform unless they give us documents. I think that's, one big challenge, compared to our Malaysia operations, whereby we are actually allowed to market to retail investors across various platforms. At the point of investment, I think there are a couple of checks and balances that the regulators adopted, which is basically limiting the exposure that the investor can get to the asset class, by a percentage of their total net worth, and also other checks and balances whereby if they want to do more, they would then have to accredit themselves by either the Malaysia standards, if it's for Malaysian products, or the Singapore standards for the global products that we have. Another, maybe just to answer your question about maybe not necessarily best practices, but case studies to look at in other developed markets like the US and I guess maybe London, as one of the deeper fintech, more mature fintech markets there, is that platforms there actually are allowed to talk about the investments first, and just really educate. So it's financial education, right? Their investors, potential investors, maybe even about what else is out there, right? Besides, REITs. And only after, when the person decides to do a bit more homework or, actually subscribe to the offering, that's where you actually start collecting proof of accreditation and documents, which is so much easier, I think, in terms of spreading the word about what else is out there.
Yeah, and if I can just chime in as well, relating back to one of the questions you asked earlier, Derek, to coming on, that user experience and the journey, does having to go off platform to get these credit reports actually slow down the process or deter the person from entirely onboarding? I'd say this has the potential to entirely discourage someone from entirely onboarding with the platform, because one, they're just browsing and they're looking to see what your platform is offering. But before they can do that, you are asking them for very sensitive information, financials, their salary statements, anything that can prove that they are an accredited investor before they can look at any deals. So this has the potential to entirely deter people from signing up. And just, based on our own operations, we have seen that the conversion rate of actually getting people to onboard once they reach that stage of accrediting, there's probably, I'd say, a huge percent. I'd even say 80% drop off from people who have come to the website to putting in their email and name and basic information, to then once you ask them for that very, kind of sensitive information, to entirely dropping off and not completing the onboarding. So it's a huge deterrent. And I think something that is something that is being looked at, I guess, and something that I think all of the industry players feel the pain point.
I don't know. I can correlate to what you and Kevin say, right? Because when I subscribe to US, right, I will just self-declare I'm an AI.
Yes.
They'll just provide me the information. Whatever new kind of investments that's available for investments, they will just feed me rather than, I go towards that. So it's slightly different from IQ, and actually it affect the business in a way, right? So, but on that front, right, just thinking on Kevin, just to elaborate further, right, in terms of, like what you say, privates, right? And we talk about AIs, but how about retail? Because I believe that people may be interested, given right now the hot money is always in the private markets right now, right? The hot money. So when do you see, will this one day be able to offer to retail? And of course, you talk about the liquidation perspective, right? But would, in terms of safeguards and transparency and protection, would equity crowdfund platform be able to support that, just in a high level?
No, I think great question. And I think I guess mission for us has always been to democratize access, right? And I think for the retail investors, I think in Malaysia, as an example, as I mentioned, we do have the license for retail investors, and there's a lot of there's actually a big push from the regulators to actually allow retail participation in, I guess, an asset class that has been the best performing asset class for the past 30, 40 years, but exclusively reserved for the super rich. But the safeguards there, they put in place for retail was, the capital as a percentage of net worth, etc., etc. On top of those regulatory imposed safeguards, I think from our point of view, and then we just did, I think, the first ever micro fund in Malaysia as well, whereby we think retail investors should have exposure to the asset class as part of their portfolio overall, but maybe, stock picking shouldn't be their core strength. And therefore, we let them pull money into a micro fund that's managed professionally, licensed by the regulators in Malaysia, and then, allow them to deploy, therefore, into many, many different companies. So diversification as one of the safety nets. The point about, I guess, applying this to other countries, and definitely Singapore is something that we're looking at, and, I think working hard to engage the regulators on as well, is also tied to, I guess, the point about being able to allow these investors somewhat of a free markets protection. Free markets, because there's no free lunch. I think the problem there is that a lot of the feedback from the regulators that retail investors will complain regardless of whatever, right? So bad weather, they complain, they blame it on you. So I think the problem there is that we have to educate the retail investors here that there is no free lunch, and there's a risk-reward spectrum, high risk, high reward, etc., etc. And on top of that, I think being able to make it easy for them to liquidate their investments, but from a free markets pricing point, is super important. Let me just elaborate a little bit more on that. So I think marketing is different from conversion, from at least equities investment point of view, because being able to market is really just educating is the first step, right? So I think for a lot of our investors, even in Malaysia, whereby retail investors who invest into our deals actually have a regulatory imposed 7 days cooling off period if they change their mind. So it cannot be a hasty decision because you're in bed with the company for as long as they stay private or before the next capital markets activity, right? So there should be a lot of avenues for them to get out of it, right, during the period, right? So in case they're pressured by the company or fan, or they were not sober when they invested. So I think that's something that is important. So to that point, like for retail investors, we need to find a mechanism whereby they can actually put back their investment, therefore liquidity, at a fair market price, so that people feel more, I guess, who have less inertia basically to invest in this asset class that is really, up and coming.
Yep. So maybe we're going to end of our time soon. Going to the last topic, Alice, suitable for you given your teachers blockchain as well in the university, right? So what you'd like to share with the group in terms of the things that we see on the marketplace, right? Be it the cryptos, be it the NFTs. What is the current interest that you see on the market, and what opportunities do you think that they're out there, right, that can fit into your business model?
Yeah, thanks for that question. I think what we've been trying to do and what we're seeing is a trend for many asset managers to look at the alternative space and bringing in NFTs, Web3 concepts, because there's a mission for diversification of products, right? Instead of your bonds and equities, everyone's looking for diversification. And what you can do is bring in some of these, like I mentioned in my presentation earlier, bring in some concepts from the DeFi world by introducing NFTs tied to traditional securities offerings that creates a community like they do in the crypto world, creates a following, creates a community, creates stickiness to products that you have already. You're not changing the fundamentals of your existing traditional offering, but you're just adding additional value, reward tokens, NFTs that just creates a bit more energy and excitement to the the investors who are going to be very digitally savvy and want alternative assets like crypto and perhaps NFTs. But it's definitely worth exploring. I'm not saying, you know, everyone should be marketing such products, but it's definitely worth exploring and understanding the concepts. And I know we're running late on time, and I know we had a couple of questions. I don't know if you want to take questions.
Yeah, sure. So maybe from now, maybe let's open the floor. So any Q&A. So if anyone who have any Q&A for any of our guest speaker, please type in the chat box.
Or Soleil, have we enabled questions from the audience?
Yep. If I may call out, we have a couple of the audience who have raised hands. So if I may just bring you to talk, feel free to speak to our panelists to answer these questions.
Hi.
Hi, Leon.
Maybe not. Leon, did you have a question for us? Maybe not. Okay, he says no.
So just lower your hand. Yeah, one last call. Maybe we're close to time. If there's any more questions from the floor for our panelists that we can pick up on, please do raise your hands.
No.
Okay, final call. I think we are good to wrap it up. Thank you, everyone. Afraid we are close to time. However, we are happy to take any more communities question to our subcom after this session. Appreciate the time that you have participated in today's session. I would also like to take this time to thank our subcommittee members and also panelists for today for the insights and updates to our SFA community. We'll be sending out a post-event survey after this session via your subscribe email. And it would be great if you could share some feedback on this webinar with us. Also, the recording of this session, as highlighted earlier, will be made available through SFA's digital platforms. So if you're interested in more of such events, do keep a lookout for our weekly SFA newsletter that has our upcoming events listed. And thank you again for joining us today. We'll see you again next time.
Thanks, everyone.
Everyone,
Thank you.
thanks, Alice.
Bye-bye.
Thanks, Ollie. Bye-bye. Thanks, everyone.